the commercial banks earn between 12% and 16% or so on net tangible assets. That's a good business. It's a fantastic business against the long-term bond, at 2%.
I think that banks have sold, a good many banks have sold at very reasonable prices. We bought all of a bank in 1969. We bought a bank in Rockford, Illinois. Charlie and I went and we must have looked at a half a dozen banks at that, in a 2 or 3 year period.
Absolutely.
Yeah, we trudged around and we found some very oddball banks that we liked. And they were characterized by very little risk on the asset side and very cheap money on the deposit side. And even Charlie and I could understand that. And low prices, incidentally, too. And then they passed the Bank Holding Company Act in 1969, and they killed off our chances to do anything further in buying all of banks. So we look at banks. We will own bank stocks from time to time in the future. We'll probably buy stock in other banks. We've also seen all kinds of banks ruined. I think it was, what was the fellow, M.A. Shapiro, who came up with the statement. He said there are more banks than bankers. And if you think about that a bit, you'll see what I mean. There have been a lot of people that have run banks in a very injudicious manner, but that's made for opportunities for other people. The question about banking, banking, if you can just stay away from following the fads and really making a lot of bad loans, banking has been a remarkably good business in this country, and certainly ever since World War II. It's the returns on equity for banks that have stayed out of trouble has really been terrific. And there are certain banks, I should say, in this country that are quite large that are earning maybe 20% on tangible equity. And when you think you're dealing in a commodity like money, that's fairly surprising to me.
Actually, banks are doing very well on new business, and the deposits are coming in. Those 19 banks will all be okay.
How would you grade the way the Treasury handled TARP?
I would say that on the TARP money that's gone to banks, in large part, I think they'll get that back with interest. Well, you can make, if you have different capital requirements based on size, which you do to some degree now, and it's based on other things than sheer size, but you can make banking unprofitable. I mean, you make a decent return on equity through leverage, and that's why you take in deposits, and you earn on your liabilities plus your capital. And if you have to have more and more capital relative to other liabilities, you can bring down the return on equity to where it's unattractive. I think our banking system is doing a terrific job, and it is not. Our banks are not as large relative to the economy remotely as in many other countries, and our banks are in better shape than much of the rest of the world's. But big banks are now being J.P. Morgan's #1, I believe, but in terms of penalized on capital, and you can make it an unattractive business. And I suppose if you push that hard enough, people would say, well, they don't like big banks. They didn't like big oil when back when the Standard Oil Trust existed. They broke it into pieces. All the pieces have done pretty well. I think the present banking system is a pretty damn good system for the United States. Well, we've added to the reserves that the banks need to hold. And we've curbed their activities to some extent. The banking system is way better shape now than it was in 2008. They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money, and I feel there's a very high probability I'm right. And I don't think they will turn out to be the best investments at all of the whole panoply of things you could do, but I'm pretty sure that they won't disappoint me. Banking is a good business if you don't do dumb things on the asset side. I mean, basically, and it's a business that the banks we own earn between the commercial banks earn between 12% and 16% or so on net tangible assets. That's a good business. It's a fantastic business against the long-term bond, at 2%. If you have a choice between a 2% instrument and a 12% instrument, which one's going to win over time? So if you ask me whether I think banks are going to go down where they only earn 3 or 4% on tangible assets, I don't think that'll happen. The question is really whether they do something massively dumb. I mean, which periodically a number of banks have done. And I feel very good about the banks we own. They're very attractive compared to most other securities I see. And most of them are buying, Bank of America is buying in a lot of stock every year. So our ownership of the Bank of America this year probably will go up 7 or 8% without us spending a dime. I'd like to own any business, any good business where my ownership goes up 7 or 8% every year without me spending any money, and on top of it, I get a dividend and so on. They're very attractive, both against interest rates and against or against bonds and against other stocks, in my view.